Welcome back to the deep dive. We need to set the scene a little bit today because the narrative has shifted so fast that I think a lot of people are still running on, last year's operating system. It's February 2026. For the last 3 years, if you walked into a boardroom in Silicon Valley, the panic was all about silicon. Where do we get the H100s? Who has the Blackwell chips?
That was the era of compute scarcity.
Exactly.
Yeah.
But today, we are looking at a completely different bottleneck. The chips are arriving, the server racks are being bolted to the floor, but the wall everyone is hitting, it's not compute anymore. It's electricity.
It's what we're calling the AI power crunch. I mean, we've seen the headlights of this train coming for a while, but looking at the data we have today, the train has officially arrived at the station. The grid is congested, utilities are moving at a glacial pace, and you have these massive AI factories demanding gigawatts of power, effectively overnight.
And that sets the stage perfectly for today's deep dive. We are tearing into the Q4 2025 earnings report from Bloom Energy, released just a few days ago on February 5th. Now, usually when people think of Bloom, they think fuel cells. Maybe they think green energy subsidies or, some niche California tech.
That's the old story.
Right. But looking at this transcript and the investor deck you sent over, that feels like a really outdated reputation. This doesn't read like a green energy report. This reads like an infrastructure manifesto for the AI age.
That is the key pivot. If there is one thing to take away from this entire report, it's that Bloom has effectively rebranded itself. They aren't just selling cleaner power anymore, they are selling speed to power. They're positioning themselves as the backbone of the AI revolution because, and this is the crucial part, they allow companies to bypass the electric utility entirely.
Okay, so let's get right into the numbers because I was reading through the backlog section and I actually had to double check the decimal point.
Yep.
Their product backlog jumped roughly 140% year over year. It's sitting at about $6 billion. I mean, just looking at the chart, that line is going vertical.
And to put that $6 billion in perspective, that is a 2.5 times increase in a single year. You do not see that kind of growth curve in heavy hardware infrastructure. That's a software startup trajectory. It tells you that the market desperation for power is real.
And this isn't just a bunch of small contracts, right? I mean, who is actually buying this stuff?
And this is the most important signal in the report. If you go back a year, Bloom had exactly one hyperscale customer, one major cloud giant testing the waters.
Just one.
Just one. Today, they have 6.
6. In 12 months, so they basically swept the board.
That's the validation. When you have one, it's a pilot, it's an experiment. When you have 6 of the largest tech companies in the world signing master agreements, that means the technology has graduated. It's now a standard. These companies, they don't sign billion-dollar deals for science experiments.
It connects to a phrase CEO K.R. Sridhar used in the call. Bring your own power. It sounds cute, like BYOB, but the implications are actually kind of wild. He's saying that for a data center operator in 2026, relying on the public utility is no longer a viable business strategy.
It's gone from a decision of last resort to a business necessity. Sridhar made this point really clearly. If you are Amazon or Microsoft or Google and you want to deploy a new AI model next quarter, you cannot wait for the local utility to build a substation. That takes 3 to 5 years. If you wait for the grid, you lose the AI race. So bring your own power isn't a slogan, it's survival.
Let's look at the revenue guidance because that backlog is converting to cash pretty fast. They closed 2025 with record revenue of $2.02 billion, up about 37%. But the guidance for 2026 is where it gets interesting.
They're projecting between $3.1 and $3.3 billion. That's over 50% growth projected for the next year.
Which is an acceleration. Usually, the bigger a company gets, the harder it is to grow that fast. Bloom seems to be defying gravity there.
It's because the scarcity of power is intensifying, not resolving. And Bloom is one of the few vendors who can actually solve the problem at scale. When the problem gets worse, their value proposition gets better.
Okay, so we've established they are selling a lot of units, but I want to understand why. Because a Bloom box isn't cheap. You could buy diesel generators, you could build a solar farm. Why are these tech giants writing billion-dollar checks to Bloom specifically? The team kept hammering on this phrase, time to power.
This is the killer app. It's the single most valuable metric in the data center world right now. In the earnings call, Sridhar gave a specific example of an AI factory deployment.
I love that term, AI factory. It sounds so industrial. Reminds you that these aren't just libraries of information anymore. They are manufacturing intelligence.
It is industrial. These are not just server rooms anymore. So this customer needed power for a massive training cluster. Bloom committed to delivering the power infrastructure in 90 days.
which compared to a utility is light speed.
But they beat it. They delivered it in 55 days. From we need power to lights on in less than 2 months.
55 days. I've had home renovations take longer than that. I've waited longer for a custom couch.
Exactly. Now compare that to the alternative. If you go to a traditional utility and say, I need 100 megawatts, they have to permit land for a substation. They have to procure transformers, which have a huge lead time. They have to string high voltage transmission lines. You are looking at 3, 4, maybe 5 years.
And in the AI world, 5 years is an eternity. 5 years ago, we didn't have ChatGPT.
Right. The opportunity cost of delaying an AI launch by a year is measured in the billions. So even if Bloom's electricity cost per kilowatt hour was higher, and in many cases it's actually not, but even if it was, the speed makes it worth it. They're selling time.
So they are winning on speed. But I want to pivot to the tech itself, because the report spent a lot of time on something that sounds a bit arcane. 800 volts DC. Now, to the average listener, that might sound like we're getting into the weeds of electrical engineering, but the Bloom team seems to think this is a massive strategic moat. Why does the voltage matter?
This is where we have to look at the physics of the grid versus the physics of the chip. Historically, the electric grid, the stuff Thomas Edison and Nikola Tesla fought, oversettled on AC, alternating current. That's what comes out of your wall. It's great for pushing power over hundreds of miles of wire.
Okay, grid equals AC. That's the standard.
But computer chips, the silicon, doing the actual thinking run on DC, direct current.
So every data center is essentially a giant converter.
Yes, and a very inefficient one. In a traditional setup, you take high voltage AC from the grid, you step it down, you convert it to DC, you might convert it back and forth a few times. Think of it like translating a document from English to French, then French to German. Every time you translate, you lose nuance. In electricity, every time you convert AC to DC, you lose energy as heat. You need massive transformers, rectifiers, switchgear. It's heavy, it's expensive, and it breaks.
Sounds like a lot of friction.
It is. Now, here's the Bloom advantage. A fuel cell works like a battery. It natively produces DC power. It doesn't make AC. So Bloom's announcement is that 100% of their new servers are 800 volts DC ready. They are cutting out the middleman. You plug the fuel cell directly into the data center bus. No transformers, no rectifiers.
And why 800 volts? Why that specific number?
It's because of the density of AI chips. These new racks consume exponentially more power than the old cloud servers, literally 100 times more density. Think about a garden hose. If you try to push a swimming pool's worth of water through a garden hose, the hose bursts. That's low voltage. To move that much energy, you either need a hose the size of a tunnel or you need incredibly high pressure. Voltage is the pressure. By jumping to 800 volts, you can push massive power with thinner wires. You save a fortune on copper and you reduce the heat loss.
Sridhar called it solid-state digital power for the digital age. It's a catchy line, but it makes sense.
Yeah.
Why power a 2026 AI chip with 1890s grid technology?
Precisely. And they did something really smart strategically here. They know not every data center is ready for 800 volts today. A lot of legacy systems still want AC. So Bloom designed a removable adapter.
A giant dongle.
Basically an industrial dongle.
Right.
Yeah. You can buy the Bloom server today, plug it into your old AC system using the adapter, but in 2 years, when you rip out the old racks and put in the new Blackwell or Rubin clusters that need 800 volts, you just pull the adapter out.
And boom, you're native DC.
It future-proofs the investment. It removes the risk for the customer. They don't have to bet on the standard today. The standard is built into the box.
I want to shift gears to the geography of this backlog, because this was a detail that I think really changes the investment thesis. If we went back in time 2 or 3 years and I asked you where Bloom Energy installs its boxes, you would have said California and maybe New York.
Right. Places with very high electricity rates and very generous green subsidies. That was the knock on Bloom for a long time, that it was a subsidy farmer. Critics said the tech didn't make sense without a government handout.
But look at the backlog now. The report says 2 years ago, 80% was in California and the Northeast. Today,
80% is in other states.
that is a complete inversion.
It's a massive signal. They are deploying in states with robust natural gas infrastructure, lower power costs, and, business-friendly regulations. We're talking about Ohio, Virginia, Texas.
So what does that tell us about the economics?
It tells us that Bloom is cost competitive on its own merits. These companies are moving to places where power is cheap, and they are still choosing Bloom over the grid. That proves the value proposition isn't just about going green or grabbing a tax credit. It's about reliability and that speed we talked about earlier.
It's graduating from a subsidized experiment to a market solution.
Exactly. And that leads into the stability of their business model, specifically the service backlog.
The $14 billion number.
Yeah, they have about $14 billion in service backlog. And importantly, the service business has been profitable for 8 consecutive quarters. They hit a 20% gross margin in service this quarter.
Why should the listener care about the service margins? Is that just accounting fluff?
No, it's critical. Hardware sales can be lumpy. You might sell a huge project in Q1 and, nothing in Q2. But service revenue is recurring. It's steady. Every time they sell a box, they lock in a 10 to 20-year stream of income to maintain it. It puts a floor under the company's valuation. It makes the business predictable, which Wall Street loves.
Speaking of technical details that actually drive value, we talked about power, but we haven't talked about the other enemy of AI, heat. I was reading about the cooling requirements for these new chips, and it's insane. You basically have to run a refrigerator for every computer.
It's a huge parasitic load. In a typical data center, for every watt of power you use to run the chip, you might use another half a watt just to cool it down.
And Bloom has a solution for this that they call the hidden app, absorption chillers. Can you break this down? It sounds like they are making cold out of heat, which feels like it violates a law of thermodynamics.
It feels like magic, but it's just clever engineering. Here's the loop. A Bloom server creates electricity through an electrochemical reaction. A byproduct of that reaction is heat. High-quality, consistent heat. Now, normally in a standard power plant, you just vent that heat into the sky. It's waste.
Right, you see the steam rising from the cooling towers.
Bloom captures that heat and feeds it into an absorption chiller. This is a device that uses a thermal-chemical process, usually involving water and lithium bromide, to turn that heat into chilled water.
So they use the waste heat from making the power to create the cold water needed to cool the chips.
Precisely. And the impact is massive. They estimate this can reduce the data center's electric load for cooling by anywhere from 20% to nearly zero.
That is a huge efficiency gain. You're essentially getting free air conditioning.
And there's an environmental kicker, too. Traditional electric chillers use HFCs, hydrofluorocarbons. Those are potent greenhouse gases. Absorption chillers use water, no HFCs. So for a data center operator who has a net zero mandate from their board, this hits 2 birds with 1 stone. You lower your energy bill, and you eliminate a nasty class of emissions.
It really paints a picture of a closed-loop system.
Yeah.
You bring the gas in, you get power, you get cooling, and you bypass the grid entirely. It's like an island.
That's the vision, the data center island.
But let's check under the hood of Bloom itself. We've talked about the sales and the tech. What about their ability to execute? Because if you have a $6 billion backlog, you need a lot of cash to build those machines.
That is always the risk with hypergrowth. Can you fund it? They ended the year with about $2.5 billion in cash. Now, they raised some of that through a convertible note, so they took on some debt. But having $2.5 billion on hand gives them a very comfortable runway.
I noticed their inventory is up pretty significantly, about $643 million. Now, usually if I see an inventory rising, I get nervous. It means stuff isn't flying off the shelves. Is that a red flag here?
In a normal retail environment, yes. But the CFO, Maciej Krzyzewski, was very specific about this. This inventory build is intentional. Remember that 55-day delivery promise? You can't do that if you're waiting for parts. They are front-loading the inventory to prepare for this massive 2026 delivery wave.
So it's not unsold goods. It's preloaded ammunition.
Exactly. It's a sign of confidence in the order book. If they didn't think the orders were coming, they wouldn't build the inventory.
The CEO mentioned something about being asset light. What does that mean for their manufacturing? Can they actually crank these things out fast enough?
That's the other constraint, factory space. But Schroeder's point was that they don't need to spend 5 years building a gigafactory before they can scale up. Their assembly process is flexible. It's more like an assembly line than a foundry. He claimed they can expand capacity in months, not years. His main message to the customers was, we will not be the bottleneck. Even if demand goes to 3 gigawatts or 5 gigawatts, they believe they can scale the manufacturing to meet it without breaking the bank.
So bringing it all together, it feels like we are watching a transformation in real time. Bloom Energy used to be this niche alternative energy player. It was a cool science project. Now it looks like critical infrastructure for the biggest companies on Earth.
They are no longer a green play. They are a growth play. They are selling the shovel in the AI gold rush, but the shovel is electricity.
So if you are listening to this and you want to summarize it for your team tomorrow, what are the three big takeaways?
First, it's the demand. The grid is broken, AI is hungry, and that macro force is undeniable. It's the tide lifting the boat. Second, it's speed. That 55-day number is the only metric that matters right now. In a race for AI dominance, the company that powers up fastest wins. Bloom is selling velocity. And third, it's the architecture. The move to 800 volts DC isn't just a spec change, it's a fundamental rethink of how we power computers. And Bloom is way ahead of the curve
It
there.
really does make you wonder about the future of the grid itself.
That is the big provocative question here.
If Amazon, Google, Microsoft,
Mm-hmm.
if they all decide to generate their own power because it's faster, cleaner, and arguably better,
Right.
what happens to the utility?
Are we seeing the beginning of the end for the centralized electric grid as the primary power source for industry?
A decentralized future.
It creates a bifurcated world. You have the premium power for the AI elite generated on-site, and then you have the legacy grid for everyone else. It changes the entire landscape of national infrastructure.
A sober thought to leave you with. Next time you plug in your phone or your AI factory, think about where those electrons are actually coming from. As always, check your portfolio, see where the infrastructure plays are hiding. The plumbing is often where the money is.
Indeed.
Thanks for listening to The Deep Dive. We'll catch you on the next one.